Welcome back to my morning report analysis video with me, Richard Perry, market analyst at Hantec Markets on Tuesday, 9th of April. Let's have a look at dollar yen, which is drifting. It seems as though yesterday's negative candle has sort of started the ball rolling, I think, in a bit of a corrective phase. Yesterday we saw a move to the downside, and again it seems to be met with another move about 20 pips lower. We've seen these momentum indicators rolling over. RSI rolled over at 60, back down towards 50. The MACD lines now already losing traction. Is that a bear cross on the stochastics? All indicators that would turn into a corrective move, I think, that you see on the hourly chart. 11.20, this reaction low that we saw last week, is a basis of support, and if you break that to the downside, I think that really does, certainly on a decisive basis broken to the downside, that really does open for a corrective move. 1080 then becomes the next support, but you could also argue this is a small head and shoulders top pattern that you would measure back from 1180, so 60 pips of downside. That gives you 1060 as a target area. And what is 1060? Well, it's a bit of a basis of a pivot. Bit of an old pivot area. So I think that is perfectly possible. And you look at the hourly RSI failing at around 50 mark, having previously been supported around that point. It's failed at that point, so that again looks like it's turning corrective. The resistance yesterday coming in around a pivot that I spoke about previously, around sort of 1060 area, 1160 area as well. MACD lines crossing over underneath neutral. These are all negative near-term indicators, and it certainly looks as though pressure is building for a downside break of 1120, and then that would sort of see the market rolling over and coming back towards this sort of 1060 area, and 1050, 1060 is an old, again, and a bit of an old level to watch out for, pivot area. So I wish you good luck in your trading today, and I will speak to you later.